Hi there, and welcome to Orbuc's weekly Crypto Signals Report briefing with me, CEO and founder of Orbuc, Ben Cooke. Orbuc's weekly Crypto Signals Report is the crypto report you can't be without if you're an individual, professional, or team that's serious about crypto. Visit orbuc.io for more information and subscribe to our Substack to receive the report in your inbox weekly. Today we'll cover a weekly review with the questions: how is the current crypto outlook evolving? How is Bitcoin currently positioned? And how are alts currently positioned? Moving to our first question, how has the crypto outlook evolved? So with the stocks pulling back driven by fears of elevated valuations and a sharp rise in US market layoffs, bearish sentiment has begun to rear its head with investors cautious moving into year end. Tariffs remain a key sticking point given the likely inflationary pressures, and with the Supreme Court set to review Trump's presidential power for implementing tariffs, investors will likely view the next few months with uncertainty. However, bearish sentiment has appeared despite broadly positive US corporate earnings and easing global monetary policy, underpinning a potential bullish structure once near-term bearishness dissipates. So just briefly taking a look at kind of what we've seen this week, going to the slide. It's the wrong slide. Thank you very much. We've seen this week essentially a pullback in the stock market driven by the view of sky high AI valuations and the relationship between the 2000 dot-com bubble. We've seen that anxiety kind of come out. We've also seen some of the big banks warn of a broader market equity correction. We've also seen some increasing US labor markets layoffs happening this week. So 150,000 in October, the highest in more than 20 years, and 1 million layoffs happening in the US market this year. And essentially, I think what we're seeing here is the new dawn of AI and human augmentation. There's potentially a little bit of a decoupling between essentially how labor can add value to the market, and we're seeing increases in productivity. Seen in revenue and profits in companies, but also an increase in firing. So there needs to be a bit of a calibration here between what now adds economic value. But I think on the near term, investors are a bit spooked by the valuations and are pulling back. So we've seen that kind of push across into crypto this week. The final thing that we've seen is the Supreme Court is going to challenge Trump's tariffs and his ability to basically impose levies on countries through his emergency statutes. So investors are seeing a lot of uncertainty, a lot of fears with regard to kind of the macro situation, and as a result, the underpinning impact for crypto is one of the first to react when it comes to liquidity. So, irrespective though, if we removing these points, we are seeing still strong corporate US earnings, and there are still easing global monetary policy. So for us, there is still kind of a basis here for the holding liquidity-driven assets. So we'll have to see how the market reacts over the next few weeks and how this develops. But before we can kind of put a pin in it, but the market is watching these figures quite closely, and also the economic data coming out of the US. Moving to our second question, how is Bitcoin currently positioned? So Bitcoin declined 7% for the week from 107 to 98K. Bitcoin ETF net flows accelerated to 315 million average per day this week versus 83 million for the prior week. BTC exchange balances remain flat at 240 million Bitcoin. Futures open interest declined 6% with funding rates down, signaling a preference for shorts, with call put skews still input premium as investors hedge downside risk. Overall, there's limited evidence of panic selling, with exchange balances remaining broadly flat and with speculation cooling despite accelerated ETF outflows. So again, what we've seen this week, this decline in Bitcoin from 107 to 98K, and we haven't technically Bitcoin is now in a bearish market, filling underneath the 200-day simple moving average. Yes, we've seen some ETF outflows accelerate aligned to the macro picture, but we have seen exchange balances remaining flat, and usually investors will start transferring their BTC from cold wallets to exchanges to start selling in a broader market panic. So for here, the supply dynamic feels reasonably contained. To kind of back that kind of point is we've seen a bit of speculation cooling within the market for open interest. So we've seen open interest fall off this week by about 6%, and funding rates decline, implying basically preference for shorts. But we're not seeing any more positioning here. So That kind of indicates a bit of a neutral view on kind of price at the moment, around 100K. But investors are still hedging for downside risk and options, as we've seen. So, yeah, there are, we believe the market is basically just undecided at the moment and just waiting for broader confirmation. But no one's at panic stations just yet. In terms of kind of what's driving this, as we've mentioned in our previous presentations, yes, the macro picture helps drive the sentiment for risk assets. But underpinning this is liquidity, and the global liquidity index is a measure that can help us kind of look at the forward-looking view for liquidity-driven assets such as Bitcoin. But we can see here there's actually been a divergence over June and July. So Bitcoin has started to pull away from its correlation to this. And just briefly looking at, actually, if we change um, our 12-week lag of global liquidity to having actually just a day-to-day view of liquidity against Bitcoin, we can see there's actually a tighter relationship now than prior before. So there are some potential implications for this. What this could mean is essentially due to faster transmission channels with institutional onboarding, with broadening ETF distribution, accelerating stablecoin issuance, there could be a tighter ability for investors to basically price in central bank balance sheets path automatically. So versus having a discretionary lag of 12 weeks, which is what usually the correlation has been and what studies show, perhaps maybe we are seeing a bit of a dynamic change here in terms of what's driving Bitcoin over the near term. So for us, we're still uncertain. We're still waiting for the market to kind of move past this kind of recession fear. We'll see how the liquidity in Bitcoin moves over the next few weeks to see if there's any further implications to take from this. But from us broadly, no market panic selling. We're not seeing any kind of major positioning in shorting, and the market appears to be kind of reasonably neutral at the moment. Moving to our final question, how are alts currently positioned? So the crypto market continues to consolidate with altcoin season indicating 20%, implying a preference for holding Bitcoin, with breadth at 15%, implying strong underperformance in alts versus Bitcoin. On a monthly basis, however, the crypto ecosystem has showed signs of recovery, with the 11 to 100 market cap and 101 to 300 market cap indices both recovering to 12% on the month, with Bitcoin at 18%, and that's minus 12 and minus 18%. AI is currently the best performing sector in the month, with memes the worst, returning 10% and 42%, minus 42% respectively. All ecosystems suffer drawdowns on the month, with Cosmos the worst impacted at minus 58%. So without the certainty in Bitcoin, that capital won't flow into alts. So as I mentioned in the season indicator, we're in consolidation phase with a preference for Bitcoin, but alts are at attractive valuations, so there's always an opportunity for alts that you're interested in to have a look and to kind of push onto that. Moving into our sectors, yes, we have seen some recovery in AI as the best performing, driven by TAO, and it's a digital asset treasury announcement, which is still driving inflows. But we've seen memes decline on the month by about 42%. So broadly, again, without the stable flows into Bitcoin, we won't see this moving into sectors. But there is some small outperformance within the sectors. And moving to our ecosystems, that's the slide. We have also seen a pretty flat drawdowns, a pretty flat performance for the week, but big drawdowns on the month of about 30% across all ecosystems, with Cosmos the worst affected. So for us, what we are seeing is, yes, at the moment there is a bit of tendency to trying to jump in and buy the bottom for alts, but really we need to wait till we see some confirmation from Bitcoin before we start to push further capital down the chain. Thanks for taking the time to listen. My name is Ben Cooke. I'll see you here next week.